The short answer is estate tax is what is often referred to as the death tax or the inheritance tax. And it's a tax that applies if you have more money to pass to your heirs than the limit that the government has set. But if you have less than that limit, then you're not going to owe the estate tax. And for the vast majority of the population, estate tax is not something that we need to be concerned with. Estate income tax, on the other hand, is a tax that applies to income that is received after someone has passed away. And it operates much more like our traditional income tax that we pay every year by April the 15th. In both cases, it is the responsibility of the estate of the deceased person to pay whatever tax is owed. Estate tax is a federal tax. There is no corresponding North Carolina state tax. But estate income tax is owed at both the federal level and the state level, and again, it is the responsibility of the estate to pay those taxes. The estate tax is a 40% tax that applies, again, if you have more than whatever threshold the government allows. As of the making of this video in 2022, that amount is $12.06 million per person. And that's why, although it's a 40% tax, which is hefty, it is a tax that not everyone is going to be responsible for. The estate income tax applies when an estate receives more than $600 of income after that person has passed. Some of the things that may come up as income may be the person's last paycheck from their job. It might be interest and dividends on investments that they had. Perhaps this person paid their car insurance 6 months at a time, and when they died, they were only 4 months into their 6-month period. Well, then the car insurance company is going to issue a refund to the estate, and that counts as income. So if all of this added together puts you over your $600 limit, then an estate income tax return will need to be filed. The taxes that apply for estate income tax are based on the same tax brackets that you and I use for our regular individual income tax return. But they are compressed brackets, which just means that you get to the next bracket at a faster rate than we would for our income. A CPA is going to be a wonderful resource for you if you're serving as the executor or trustee and are having to deal with these tax issues. But again, the major difference between estate tax and estate income tax is not only the amount of money that we're talking about, but also that one probably isn't going to affect a tremendous amount of people, whereas the other, the income tax, will.